Welcome back to In the Street Trades, where we give a blue-collar view of a white-collar world. My name is Rob. So this week is a big week, kind of like kickoff week in the NFL world. And, aside from free agency signings and things of that nature, but it's draft week. It starts tomorrow, the 29th, and being from the city of Cleveland, typically the draft is usually a big deal for us because we're always so awful that we generally have a top 5, top 10 pick. In fact, it was so bad with our 1-31 record those 2 consecutive years that we had back-to-back number 1 draft picks. But a little bit different this year, as we are picking in the mid to late 20s. So I thought instead of focusing on what we've been doing, which is picking a single security, doing a little research and deep diving into them, we talk a little bit more about building and developing your portfolio. Now, if you're new to trading, one of the things that common missteps in the beginning is focusing in on one security or stock way too much. You go all in because you want it to pop big and make the giant profits. But investing is a long-term game. And in order to be successful, just like any team really is, you need the right types of players to protect yourself and to give yourself a fighting chance to win. And that's what this is going to be about. I called it drafting your portfolio. So what we're going to look at is the idea of kind of making a well-rounded portfolio. I'm not going to get deep into like bonds and stuff like that, but just your basic flat base. Okay, so any team, any good, for instance, NFL team, they usually build their team around one player, and that player is your quarterback. Now, when you're building your team, your quarterback, this is your centerpiece long position stock. This is the one that you're going to keep adding to consistently, and you're never really going to touch it because you're looking for it to just develop over time. You believe in it. This is your franchise player. You're signing this security on for the long haul. Now, it's up to you, though, to determine what type of QB you want. So what type of security you want. Now, I gave a couple examples here. So, you have your riskier type of QB. Your guy runs around. He's doing read options. He's outside the pocket, throwing on sidearms, kind of like Patrick Mahomes there, or like a Lamar Jackson. These are ones that can win. They are winners. They're proven winners. But there's a lot more volatility and risk involved, like a Tesla. We all know that Tesla, as a company, is a successful company. But it's not out of the realm of possibility that one day it's at 500, the next day it's at 900. So that's what I mean when I'm saying a riskier player. It's not so much riskier in the long run because you believe in the company, but it will be all over the place. But if you want to take a more conservative approach where you'll still have growth, but it's steady over time, it's the consistent player. It's the one that's what you're going to get because it's proven itself time and time again. This is your Tom Brady stock, and I equate that to like a Microsoft. If you ever look at Microsoft's long-term chart, it's just the slow and steady climb. I mean, there's obviously some dips here and there, but it's pretty much all reliable. Now, there's no rules in place as far as you building your portfolio. This is your thing. So let's say you want your starting quarterback to be your Microsoft, and you can get your backup quarterback. Throw Tesla in there. There's nothing stopping it. It's just who you're going to invest more into. Because your starter, obviously, you're putting more into that than you would your backup, but you also like the idea of like, oh, okay, I'd like Tesla to come off the bench and make a pop, or maybe you want to push the big fortune towards it. So wide receiver was next. Now, wide receiver, I say that this is your big play stock. much like a wide receiver, they get a lot of attention, right? And typically, most wide receivers will have a few big plays a game. I mean, you'll have your 10, 15 yarders, but like for a 40, 50 yard play out, I mean, you don't see them very often. And that's that explosive stock. Like from time to time, it will just pop and run. And these are the ones I usually equate more to swing trading, but there's nothing that says you can't make it a long-term investment. And I put Mavis on here as an example because I believe Mavis is a fantastic long-term investment, but I also believe that there's opportunity with this wide receiver to make money in swing trading. I mean, a great for instance is just 2 weeks ago, MVIS was trading at just over $10, and now it is currently right around $25. So lots of peaks and valleys. So it's up to you on how you want to utilize this player, but that's the type of idea, behind it. Now, mostly every good team has a good running back. Now, running back, these are the stocks that are going to keep you in the game. They keep the market honest with your portfolio. These are the ground and pound ones where they may not be the biggest growth stocks, but these are companies that have been around forever. They show at least slow percentage increases that will garner you some. It's going to keep you in the game, and it's going to keep your portfolio from just flexing all over the place all the time. Not to say that your running back can have a huge game one day, or he may get injured and be out for 6 to 8 weeks because they had a bad earnings report and he tore his ACL. So the examples I gave was like a GE, Ford, or a Boeing. Boeing's a great example. Boeing just posted bigger losses than was expected in their earnings, and it just dropped down. But over time, you look at that company, it is all reliable. And when it comes to that particular industry, there's only as far as building airplanes for the industry, there's really only a few big players, and Boeing's always going to be in there. So that's those are your running back stocks. Certainly, there's more, and it depends on what type of player you want. The reason I put AP in there is like you can look at him early on, or you can look at him now. He'll still keep you in a game if he has to, and that's what these stocks do. Now, offensive line, I equate this to nothing moves without the line. Like everything on offense is determined by what's going on with the offensive line. And the comparison I do here is your capital. This is your what you have available to make moves at the time they need to be made. Some people are completely always all in somewhere, and when a move does happen that you want to jump on, you want to shift the line and try to make a big play, you don't have any dry powder. You don't have any cash available, and you have to wait for it to clear or whatever. And by the time it clears, you miss the play. So, this also determines like what sort of offense, what sort of purchases, what sort of plays you're going to be making on a daily, weekly, monthly, and annual basis. So if you want to aim more towards like swing trading as opposed to long term, this is where dry powder becomes super, super important. Having it at the ready so you can attack on something when you see it's a good opportunity. Particularly, let's say you have one of your big tech stocks. For some reason, and this was exactly something that happened to me. This was a couple years ago. I want to say Facebook got just demolished in the news for some sort of security breach, and their stock dropped $40-$50 in a day. And this is before it was at the 300 level. We're at like 150, 160. And it just, 35% loss on a tech stock in a day. And as soon as I saw it, I had my dry powder lined up, jumped on it, picked all of it I could up. And over the course of the next 6 to 8 weeks, that was all profitability that was gained back, because we knew that this company wasn't going anywhere. So it's that sort of thing. That's your offensive line making the play, making the shifts to make it make money for you. So now defense, this is all about protecting your portfolio. There's times where the market goes bare, and like certainly we'll get into this on the next slide. There's other ways to profit on that, but let's say you want a little bit more protection that you don't have to think about. This is what I call dividend stocks. And if you don't know what it is, most people, you should. They're stocks that per share they pay out a certain amount. I believe it's quarterly. And a good example of this, like Texas Instruments, JP Morgan, I want to say Coca-Cola does it. GE did it for the longest time, and they're talking about bringing it back, I believe. But if you ever look at your big whale power players, a lot of the times they'll have major investments in these dividend stocks, just so you can keep garnering an income off of it just for owning it. So that's your defense. Now, the last thing I wanted to throw up here is the Wildcat. And I'm not saying Wildcat's always a crazy play, but there's a lot more risk involved. You never know if it's going to work out, and this is what I call options. And options are another tremendous play to help, a tremendous way to help you play defensively too. If let's say you have a stock, for instance, that it's one of your longs and you truly believe in it, but you can clearly see the downtrends coming. There's nothing that says you can't buy a put on that and for a short term and make money on the way down. And then once you feel that is about to transition back, buy a call option on it and try to make that income. But again, riskier play doesn't always work out. I mean, I don't know off the top of my head, but I want to say 90% of like options don't finish in the money. So just give you an idea, and really don't touch them unless you know what you're doing, because it's not just about where the stock price is going. There's a lot more elements to options. There's time decay. There's volatility. I mean, there's a lot to it. And the last thing, I didn't have a slide for it. I was going to throw a kicker in there just because I kind of felt bad for him. And one of my favorite guys to watch is Pat McAfee. And anytime they don't throw out a punter or a kicker into these sort of comparison videos, a little shade gets thrown. So, but I don't have one. I don't know what to tell you. I mean, I guess that would. Oh, you know what? All right, you want a kicker? Your kicker is going to be your established penny stocks. Okay, so anything under $5 that you can make real quick nickel and dime moves. It's going to give you some action. You could take the points, make the money on it, but you're not going to invest highly into it. I mean, it's kind of horrible. Like kickers out there be like, we don't like you, Rob. But I hope you guys enjoyed this video. I had a lot of fun doing this one, and I apologize to anyone. Yesterday I sent a tweet out stating that a friend of the channel, Vince, and I were going to have a video about sports betting stocks, and we did record it. However, had some technical difficulties, so it will be coming. So forgive me on that. And anyone else out there, if there's a particular team you're rooting for or watching for this draft, leave a comment below. We'd love to hear about it. As you could tell, I'm a Browns fan, got the Jim Brown going on, so I appreciate you watching it. If you made it all the way to the end, thanks again. Have a good one.